The Bank of Japan is moving quickly to make sure the Japanese economy can withstand the impact of the massive earthquake, pumping $183 billion into the financial system to keep cash flowing and also to help stabilize the markets. For more on what's next for Japan, we welcome Brendan Brown, chief economist at Mitsubishi UFJ Securities. Brendan is a Bloomberg Best forecaster on the Japanese economy. He's with us from London. Brendan, $183 billion into the Japanese financial system. It's a lot. Does the BOJ have the tools necessary to contain the short-term impact of this quake?
Yeah, I've absolutely no doubt about that. 3% of GDP liquidity injection into the Japanese banking system is a huge amount, and it will also be useful towards driving the yen somewhat lower in coming weeks and months, which is essential to any recovery path for the Japanese economy.
So let's talk, though, about the medium and long-term impacts then. If the BOJ can help to stabilize the economy in the short run, does the quake, and nobody really wants to talk about the quake as a stimulus for the Japanese economy, but Japan has been fighting inflation and moribund economic growth for years now. Is it possible in your mind that Japan might in some way benefit from the reconstruction effort, or is the impact on Japan's trade position going to outweigh any of that?
I don't see natural disaster in any way helping the Japanese economy. Japan is left a lot worse off by this natural disaster and will have a huge bill of reconstruction and saving and public finances having to go into reconstruction, which might otherwise have been boosting productivity and development in other areas. Having said that, there will be a period ahead of maybe a quarter or two during which the economy falls with output constraints, and then you will get a reconstruction recovery. But net, that's not good news. Japan gets left worse off than before.
Brendan, can Japan pay for the bill that's going to come due for all of this reconstruction work? It's already got one of the highest debt to GDP ratios in the world.
Well, in many ways, that's the biggest question that comes out of this in terms of market impact. Already net government debt to GDP ratio in Japan is about 130% this year, with the gross debt a lot higher than that. I would see the natural disasters Japan has now suffered, maybe bolstering that debt to GDP ratio by as much as 5 to 10% in the next 2 years, if you take account of all the payments which will come out of that. Now, that may not sound a lot in itself, but we're in a psychological zone now where something like this could be the tipping point, which would make investors in Japan in particular question whether it's so safe to put such a high proportion of their funds into the JGB market, which has been sort of a bizarre feature of the Japanese financial landscape for some time.
Well, do you think, though, that they might? Do you think that there will be a reevaluation of the Japanese tendency to invest in domestic debt securities?
Very much so. This Japan home bias is something which very likely will begin to melt in coming months and years as a result of this. If you're a Japanese investor and you're staring at over half your portfolio being in JGBs, and the geological risks and the huge government debt risks in the longer term in Japan, you have to ask yourself whether that's the right balance.
So Brendan, I mean, really, you're taking this conversation to a very interesting point. Can we really underestimate, then, the economic impact long-term of this disaster if the Japanese investor, the individual investor, reevaluates the whole point of investing in Japanese government bonds? That could really spell trouble, not just for the Japanese government, but for the economy long-term.
Well, trouble in the sense that there's a funding issue, the yen would fall sharply, but you could say in a way that that's by bringing reality back into the Japanese financial markets will add to the pressure on the Japan government to reduce its spending and reduce its deficits, and a weaker yen will actually bring some sort of renaissance in the longer term in the Japanese economy. So it could be the catalyst that sets Japan back onto a better direction rather than what we've had in the last 10 or 20 years, where Japan's huge private sector savings have sort of been squandered in this massive budget deficit, financing roads in the middle of nowhere and expenditure of dubious returns.
Well, there's so much yet to play out, but as you point out, Brendan Brown of Mitsubishi UFJ Securities, this could bring reality back to financial markets in Japan. Thank you so much for joining us. That was Brendan Brown, a Bloomberg Best forecaster on the Japanese economy, and you heard his analysis and insights there.